Good evening and a warm welcome to the viewers from all over the world. We have another such inspiring CEO and founder with us today, Sougata Basu, founder at CashRich. Sougata, welcome to the show.
Yeah, thank you, Siddharth.
Sougata, you conceptualized and built CashRich as a dedicated wealth management app that's designed to give its users complete control and transparency in their investments. So I think it's an excellent idea, definitely in need of the hour. And first of all, a very commendable initiative that you've undertaken, Sougata. So where did the idea come from?
Sure. So the idea came from the problems that I was seeing around myself, in my family, and within my friend circle. So if you remember, in 2010, 2011 timeframe, most of these investments used to happen using paperwork. And also the bigger challenge was that if you walked into a bank, then normally they would sell you something called a ULIP, which is a insurance linked product. And because of the heavy, commissions and inbuilt fees, the bank relationship managers would definitely first try to sell you those type of products, which were inherently bad for anybody. And I saw my father buying those sort of products. Even some of my other family members had a lot of insurance products in their portfolio, and which are not investments actually. Okay, but it's just packaged as an investment. So that's where I thought that this is a huge problem. And when I was managing money for Tata Steel Group, the corpus was huge. It was almost 12,000 crores, and there almost on a daily basis I had to spark thousands of crores of investments in different types of funds. And there I came to know about liquid funds. And in the year around 2013-14 period, those liquid funds used to give a very good return. It was, I think, 8.5% kind of return, and where we could also withdraw anytime. Now I tried to buy that liquid fund for my father, because I thought that it's a good product. It's a relatively low risk and easy to understand product, and then it will be good for his portfolio. But when we went to the bank to buy that product, nobody was willing to sell. The one private bank in Calcutta actually refused, said that we don't sell this product. I couldn't understand the reason why, because it was very easy to transact. They could have just, even though it was in physical paperwork also we were ready to do, but they were not ready to sell. Then I came back to Mumbai and I asked the ICICI and all the HDFCs of the world, like, what exactly is the issue? You are coming and selling me thousands of crores of those same things, but when I am going as a retail investor, then people are not selling me that. So then they told me that those liquid funds are not having any inbuilt commissions or fees, or it was a very low cost product. And if we don't want to sell because it doesn't recover any of our costs, it is a product which is good for the end investor, but not for the companies or intermediaries. Okay, so that's where I thought that this can only change if we use technology. Otherwise, really the economics doesn't add up to sell a product which you will not earn anything, and then it's good for the end investor, but then nobody in the value chain is earning, so they don't want to push that product. Okay, so but if it is technology driven, then the marginal cost of delivering the service is zero. The user will himself transact. Is just a database entry. It doesn't matter. So when we started with this liquid fund product in our app, and that became very successful.
What is the USP according to you of CashRich?
Right. So see, the other wealth management apps that are in the market, most of them, what I have seen are focused on the transaction layer more, in the sense that if anybody wants to buy the product, they can come create an account and they can start transacting. But there are certain mistakes that people make when they invest. And that's where we have our USP, that how can we prevent those investment mistakes. So I'll give you a few examples. In 2018, the small cap mutual funds were at a very high valuation. So if you looked at the returns of small cap schemes in 2018, then everything would look very good, my plus 20, plus 30% returns. Okay. And if you go to any of these online websites, that's how most people purchase. They just type the name of the scheme in Google search. They get the first few links. They click, they see a 5-star rating. And then they see first 1 year rating or 3 year rating return, 1 year, 3 year return. And then they try to purchase. Now rating and return is fine, but that is not enough to take this decision. Okay. So in that small cap kind of a situation 2018, you would get these 5-star ratings and you will get plus 20-30% return. Naturally, someone who will assume that this is a very good thing to invest in. And that is what I had seen in most of the apps, that they would by default either sort by return or do something, and they will put all these small cap schemes upfront. And naturally, users will invest. But we found that these schemes are very overvalued, and it's just a matter of time when they will go down. And that actually happened. And now also some of those schemes are in negative. Anybody who invested 2-3 years ago will be in a negative situation currently. But in CashRich, none of our users got affected because we stopped showing those small cap schemes when their valuation was high. We did not even display those schemes. So if you don't display, then people don't invest. Very few people come and say that I want to invest in this, and at that time you may also warn them that okay, valuations are very high. But more or less, if you the system itself controls by having a curated list of schemes which we have researched, and we know that within that category these are better from a risk adjusted basis rather than giving everything out. Okay.
Understood.
And another incident which has happened just in April this year, 6 Franklin Templeton schemes have wound up, and a lot of investors' money is stuck. As per my own knowledge, I think all the wealth management apps had those schemes, and their users, whoever has gone for those Franklin, must have got stuck. But in CashRich, no user got affected. Now, that is the difference. So why no users of CashRich got affected is because it was not again a fluke. It was a matter of investment research and credit research. And in February 2019, I had sent one email to the entire database of CashRich saying that though many of you want to invest in Franklin Templeton schemes, but we will not have those schemes in our app. And the reason is we feel that they are taking more than the required credit risk, because the scheme has underlying securities, and you can understand whether they are buying something of good quality or bad quality. And these things don't suddenly happen. They happen over a period of time. And Absolutely. It is not a black swan event that, suddenly one day it has happened. It is a black swan if you didn't follow the story. If you know what is happening, then it not be surprising. Okay. So, because we told this to our user base and we didn't enable those schemes in our app, nobody could invest also. Now nobody has lost the money. So that is where some amount of risk management is required from a financial research side. Otherwise, in fintech, if it becomes only UI, UX and tech and no finance, it's not a proper fintech product. So that's where I think we have differentiated. When you asked about the USP of CashRich, another aspect which I wanted to highlight was a product that we have started called Dynamic SIP. So the reason why I wanted to highlight that is that's a process which is not there in any other app currently. And what it does is instead of putting your money in the equity markets always, it tries to understand what is the relative valuation of the market and automatically split your money into fixed income and equities. So if share market is very high, say in January 2020, share market was, Sensex was 41,000, 42,000, very high. So at that time, only say 10%, 15% of your money will go into share market. And when March things correct and there's a crash, then say 70, 80% of your money will go into share market. Automatically by doing this, your returns improve, and also the behavioral and emotional aspects of investments are taken care, because when things are up, you should be investing less, but opposite behavior happens. And when things crash, then you should be investing more, but then people are scared and they don't invest. So to correct that behavior in a large scale, environment, you can't really speak to people and do counseling on a one-on-one basis and a scale. So to do it at a large scale, we have automated this process.
Perfect. So Sougata, it's been a pleasure talking to you. Thank you so much for making the time to come on the CEO's chair.
Yeah, thanks a lot, Siddharth. It was great speaking with you.